It's happening. It's that time again. I'm restarting my altcoin trading. And I warn you before you proceed that altcoins can give very generous gains, but they can also take those gains away mercilessly and more. It's different to trading BTC and ETH. We have a whole host of other things we need to worry about. Far more volatility, liquidity issues, random news events and scandals coming and just invalidating the entirety of our technical analysis, or just Bitcoin crashing and taking everything down with it. It's actually a lot of fun. It would also be hilarious if it's the top the second I start trading them again. Remember, we're not in a bull market. In bull markets, you can just buy the dip and you're pretty much fine on most altcoins as long as the narrative lines up. Even if you catch the wrong altcoin, you're just going to make less gains rather than no gains. This is more like 2019 trading conditions. Real traders, snipers, they're the ones who thrive. I want to share with you my processes and rules, the things I've fine-tuned in the last 6 years. And one of the most important rules, which is actually a little bit controversial for altcoins, is never be the first or last person into an altcoin trade during the bear market. Those are the places where people get the most wrecked. And actually, being early is one of the most dangerous things you can do. You may stay stuck in an illiquid altcoin for a long time while other things pump and your emotions become a wreck. People really want to be early and catch the coins before they pump. But the thing is, even if you're going in early before they've pumped, you're probably not going to be able to build the biggest position, especially if you're doing good risk management. And you can actually make a lot more money catching a smaller pump when you can actually have a bigger position where there's more volume and liquidity. The other one is a bit more obvious. Never be the last person left bag holding. Do not marry these bags. They exist to make us money. This is what happens. You enter one trade, it goes up 20%, you take profits, then it goes up another 100%, and you're depressed because you could have made a lot more money. Then the next time a coin pumps 20% and your system tells you to take profit, you don't. And this time it pumps 20 more percent and then crashes well below where you bought and you get wrecked. I'm going to help you avoid these mistakes and more. So if your goal is also to make money and not get wrecked, leave a like on this video, subscribe to the channel so we can make money together. Before you trade altcoins, you'll need 3 things. A TradingView account so you can actually chart, an account to trade on. I use Phemex and Binance right now. They're great for altcoins. You'll need a basic understanding of technical analysis, and I have a free course on this. You'll find links to everything I just mentioned in the description below. Step 1 of altcoin trading. You want to quickly look at Bitcoin. Like I said before, if Bitcoin crashes, everything is going to crash. Take a quick look at the market structure. And we can see macro, zoom out, bear market, clearly going down, progressive series of lower highs and lower lows. Then we're seeing in the medium term, a shift here. You'll see I avoided altcoins for the most part while we were in a downtrend on most timeframes. But now we're seeing, at least here, low, high, higher low, higher high, higher low, and again, another higher high. At least in the short term, we're seeing a lot of momentum. Throw the moving averages in, they agree, they're fanning out nicely. And you throw a Fibonacci level in as well, like this over here, and we can see even the current move is above the 382 level. The 2 key levels we want to watch is 25k resistance and support at 21.5k over here. So as long as the price remains somewhat above this level, I'm comfortable in my altcoin positions. We're going to start with an old friend of mine, Link, one of the most profitable altcoins I've ever traded. I have a lot of fond memories here. And marking out a few key levels on the weekly, we'll fine tune these as we go down to lower timeframes. We've got support here at about 5.5, resistance at 9. Market structure is going down and consolidating sideways. We're seeing somewhat of a trend shift occurring over here, but we saw the same thing again here. Lots of bullish candles going up into resistance, failure, sideways, failure down. And now the difference between here and all of this is the fact that BTC is now on our side. If we end up being right here, we can make a lot more money. So we zoom into the daily and we try pinpoint some key levels. And I can see a strong resistance over here at the $8 level. Data point there, data point there, data point there. And we can see every single one of these moves above it got sharply rejected at around 9.5, the peak. Yeah, so they went up, rejected at 9.5, came back down, up, rejected cleanly, up, rejected, bounced, then rejected cleanly. These sorts of clean moves up and down normally result in more clean moves up and down when the price breaks out of it. We can see we've had harsh rejections, clearly showing we do have a very key level over here at $8. And right now, we're seeing a fair bit of strength going straight up into resistance. Big move up here, came down to about the 0.5. Then we had a second move up here right after, trying to break out, and it went down to about the 0.5 level again. So two reasonably strong moves going up to this $8, where we're seeing our first potential breakout. Potential profit up to that resistance is 20%. So my favorite play is going to be watching the 4-hour chart over here and waiting for a nice breakout of this $8 level to catch a similar move up to hopefully this $9.5 level. Then we can reassess the situation, and that's really going to depend on BTC. If BTC is still below the current high of about 25k, I might look to take some profits here, wait out and not do much. But if BTC is also looking to break out and I get a good entry here, I could definitely go for some more aggressive targets beyond this initial $9.5 level and potentially even this $12 level, and then again reassess the situation there. I could give you more price targets up here at $18, potentially up here at $30, but we really want to look at this level to level. This is plenty for us to work with right now. When the time is right, I'll update again. Now, warning, the next altcoin might trigger some of you. The next altcoin is actually going to be NEO. And I know a lot of you are wondering, why is NEO on your watch list? It's already pumped 200%. Remember, we never want to be the first or the last. And right now, we're definitely not the last. See, the thing is, when coins pump like this, they seldom go down in a straight line back to zero. So even if it does not once go over $15.5 again, there is a ton of money-making opportunity here. We don't need all-time highs to make money. We need heightened emotions, volume, and volatility. So what I'm going to be looking for here is this $8 level up to, say, this $15.7 level. So let's start on the weekly, and this coin's been around for a while. Mark out some key levels. When doing this, use recent price data as much as you can because it's going to be much more reliable than price data from, say, 2018 on a coin as old as NEO. So a few key levels marked out, and they line up quite nicely with what the price has currently been doing. The general structure, we had a low here, high, another low here, and then a new high there, and we're rejecting quite hard off of this resistance right here. But now I'll show you exactly how we can and will profit off of this. If we zoom in to the 1 day and we use again this tool, the Fibonacci levels from here to the top, I'll show you an opportunity that we're going to apply to the next coin I share that's already occurred here on NEO. Now this was one of my favorite strategies in 2019. I'm going to be applying it aggressively again to altcoins. The first theory is that people that bought these coins are going to be very greedy, and that is normally a very reliable theory in crypto. The second is that this is not going to go down in a straight line. We're going to take advantage of these two things to make money off of this coin. So we look for levels where we think the price is going to bounce. So for now, we'll get rid of these key levels that we previously marked out, and we're just going to focus on the Fibonacci's. I can see 236 has a confluent data point here. I know the 382 is one of the most reliable bounces, and I see great opportunity here at the 0.5, confluent with this level there, and even again at the 0.618. So every single one of these give us potential opportunity to catch a bounce. So how do we position ourselves? We'll look for a set of laddered orders over here, trying to catch the long. You can take a midpoint, and then you can target something like a failed bounce up here. And remember guys, you're not going to win every single trade. I don't sit here pretending I'm an oracle that always wins. This trade, as you'll see in a second, fails because one more candle and we hit our stop loss. So what do? On to the next one. We take our loss and we try again. This time 0.382 up to the 0.236, maybe a little bit lower because of this price action there. Set our stop loss about the midpoint. Here, we've got a beautiful 2R trade, and price goes, we get our entry, and bounces pretty much straight after. You could have even been a bit more aggressive and got this trade up to 3R. It's an extremely simple system, and it just needs you to not be greedy. You're not looking for the new all-time highs. Most retail investors are out there trying to catch this coin going to the new all-time highs. And that is a viable strategy, can make you a ton of money if you know what you're doing there, but this is so reliable. You can do this daily on every single pump and make consistent income. 9% is more than enough to make money, and you'll get more and more opportunities on these coins. Taking a look at the current position, we're going straight into the 0.5. This gives us another opportunity to set up the exact same trade. And you don't always just have to target the 382. Go and test these yourselves. Build your own systems. I'm not telling you exactly where to buy, exactly where to sell. I'm trying to give you the underlying theory so you can build your own trading systems. What signals do you need to buy and sell? And if you don't know how to do that yet, if that's too complicated, go take my free course that'll teach you everything you need to know about these indicators. And I don't just teach them on the surface level. I tell you why they work, how they reflect psychology. So opportunities I like coming up on Neo, we've got potential buy area here at the 0.5 and another nice buy area here at the 0.618. I like to call these scalp zones. Enter and exit quickly. Your goal here is not to get new all-time highs. Your goal is to take advantage of 8% here and 8% there to make money. And I know it doesn't sound like much, but if you stack these up, they will compound. If you catch 8% moves, you will double your portfolio. And the next coin we're going to look at is CFX. Again, another coin pumped by the same narrative, packed with greed and opportunity. Yes, it's already gone up something insane like 20x, but that just means more volume and volatility. It's possible, but coins seldom go down in a straight line like this. When they go down, it looks like this. And where do we make our money? We make our money on these bounces. Because when the crowd is looking one way, look another way. What people want is another 20x. They want to get into this coin and ride it to new all-time highs. Or they're back holding, hoping this is what's going to retire them. We take our Fibonacci levels from the bottom of the move here. This is so clean, it's very obvious. And we'll go down to a lower time frame over here, the 4 hour. And where are our best profit opportunities? Start here, 0.5. I absolutely love this, confluent with this level there. 0.618, big fan of this over here. I don't love the 0.382 here as much, simply because we've got a lot of price action there and a potential resistance formed over here. So if price comes down to the 0.382, we've already got some potential resistance here, halving the potential profits. But even there, look, we've got a potential 10% move to profit off of. If it comes down to the 0.5 and we catch a nice bounce here, a potential 18% move to profit off of. That doesn't mean you catch the whole 18%. It means you build a system around the theory that it could bounce anywhere from 5 to 18% reasonably, and you build your system around that. You could buy and follow the trading stop loss. You can buy and target the midpoint, or you can even build a system where you go from 0.5 to 236. You need to do the boring work. Boring work is getting a trading journal, sitting down, and then just trying these systems out again and again while also testing them in real time in the market until you crack the code and you find that thing that works for you. I'm leaving all the breadcrumbs. It's up to you guys to pick it up and start making money out there in the markets. Let me know if you enjoyed today's video with a few more altcoins and strategies in the comments below. Otherwise, I'll just assume people just want BTC and ETH videos and don't want to see altcoin videos like this.